Welcome to Investors Insights, episode number 179. Today we will be discussing the uncertainties being created by the Fed, as well as how it impacts your portfolio. Don't forget to connect with us on Facebook, LinkedIn, and Twitter. We'd like to continue the discussion there. So let's get right to the topics that we are facing this week.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Plan Partners.
Bobby, good to see you this morning.
Good morning.
Great discussion earlier this morning in terms of portfolio strategies.
It was.
So we had quite an event last week at Jackson Hole. Talk a little bit about the markets in relation to what's going on.
Yeah, so last week we talked about all eyes were on the Fed, and they were. And so let's talk about Friday, what happened Friday, because I think it's a good example of what we as investors have been fed up with the Fed. Because Friday, Janet Yellen came out and said that they're still data dependent, but a gradual rate hike is appropriate. Well, the market took that as there's no timetable. Let's go up. Market went up 120 on the Dow. Well, an hour later, Stanley Fishers, a Fed governor, comes out and says 2 rate hikes are appropriate at this time based on the current data. The market swung down 200 points on the Dow.
Right, exactly.
And that's been a great example of what has happened the past 18 months with the Fed. They say one thing, the market goes up. They say another, it goes down. And it's just, there's so much uncertainty by the Fed. And one interesting point is Janet Yellen said they're data dependent. Well, an hour before she spoke, the GDP was revised down for the second quarter down to 1.1%, which is, that's not good.
Right.
And so you want a 3% strong economic report coming out, and it was 1.1%. So if they're truly data dependent, they have to be looking at that and saying, okay, we need to wait a little bit further. So,
absolutely. Well, and that's one of the problems that our clients need to understand is going on here. They've heard that the stock market has, reached a new high. What they need to understand is that may be a few stocks within the Dow Jones Industrial Average or the S&P 500 that has driven that. The overall market, though, from the standpoint of corporate earnings, we've seen corporate earnings continue to go down. The Fed information has continued to show a weak economy. So those kind of things, we're looking at, and at the same time, the Federal Reserve can never come out, members of the board, and say, this is exactly what we're thinking. And one of the things we believe and cannot confirm, but is that the Fed is using words to kind of keep the market from getting too overvalued and at the same time trying to navigate to prevent it from going back down. You agree with me on that?
That word game they're playing is causing the uncertainty, though.
Right,
so
exactly.
They're hurting the market.
Right, and as investors, you also need to understand we're in a presidential election year, and historically the Fed does not make moves in a presidential election year. So really, from an analysis standpoint, one has to ask the question, if they raise rates, will it be in December after we've had the election, before the new inauguration, so the outgoing president, President Obama, can leave his legacy, and at the same time, the new president coming in really can say, well, it happened before I showed up, right?
Yeah.
So, and that causes volatility within the market. And so just as Bobby discussed, this up and down swings that we're seeing, we're watching closely on that to make sure that we can prevent downside on that if at all possible. By law, as everybody knows on this video, we can't guarantee that, but we're trying to navigate through it as we move forward.
Yeah, so again, Janet Yellen said they're data dependent. Well, we're having a lot of data come out this week. It's a huge week. We should know after this week if they have the data or the ammo they need to raise, because today personal income comes out, tomorrow consumer confidence, Wednesday a lot of housing numbers comes out, and then Thursday manufacturing index, and then the big number on Friday, the jobs number. Jobs number has been great the past 2 months.
Right.
And so we're watching that carefully to see if the Fed actually does have the ammo they need to raise in September. We think it's going to be December, but that could change based on the data coming out. So
right. And at the end of the day, understand, yes, raising interest rates is a big issue, but also corporate earnings are. Exactly. And we're not seeing corporate earnings go up. And so the debate of, are we in a bull market that is just taking a pause, or are we in a bear market that's getting ready to start? Those debates are going on not only between us, but across the markets and the investment industry. So we hope this has been informative. We wanted to keep you up to date. We hope you have a great week, and we will keep you informed. Thanks.